it really is an area where we play in every day in terms of the decarbonisation space. You know, we have lots of regular conversations with our customers on the topic, so it is something we live and breathe, and it's not new to us by any means. So just a bit of a reminder. So Facilities and Asset Services was, just change slides here, was formed on the 1st of July last year. So it was really the coming together, or the final step in integrating the Spotless business into Downer. So the Spotless New Zealand businesses went to Downer New Zealand. The Spotless defence contracts went into the Downer Defence business, and basically everything else that was left over was joined with our industrial services businesses and became Facilities and Asset Services. So, so as you can see, we have 5 key lines of business. We're structured across what we believe are our key growth sectors, where we have considerable upside exposure to the ongoing growth in health, the steadily increasing government outsourcing, which seems to be ongoing all the time, the energy transition, of course, commodity markets, and also a really important factor for us, which is really the re-emergence of Australian manufacturing and Australian industry. Our asset and development services business sort of works across. It provides specialist FM, integrated facilities management services, and HVAC, being heating, ventilation, air conditioning, services across all of our other businesses, across all of our other sectors. So we turn over a bit over $2 billion per annum. We'll finish with this year with about $14 billion with work in hand. So really pleasingly for us, this year we've not only replaced the revenue that we burnt through the year, but we've also added another 1.8 billion to our work in hand. So we've been growing quite steadily. There's 3 key trends that really impact our business in a positive way, and the first, of course, is decarbonisation, which is the theme I'll focus on today. The second is what we're seeing around that, I guess, the post-pandemic reflection on the quality of our health services and our government services, and what we expect from governments and the health sector in general, or what the community expects from health. And the third's really that the current geopolitical situation and how that's impacting the renewed investment in oil and gas, in power generation, and in industry in general. There's a few big numbers on the slide. You'll see there 17 health and education PPPs. We're definitely very much in the leading position when it comes to those sorts of PPPs in Australia. But you'll also see things like 287,000 buildings that were maintained and 100,000 odd social houses that we look after. And they're just important to keep in mind as I refer to decarbonisation through the presentation, because the reality is that decarbonisation isn't just about new infrastructure, new technology. It's also about retrofitting schools, buildings, hospitals and assets that we already look after. So, modifying, etc. And I'll talk about that a little bit later. I'll just flip across here. So just a quick one on the national footprint. So about 14,000 people in the business. So it just kind of gives you an idea of our spread. You'll notice very importantly that the red dots, I'm not sure how we can see that, but the red dots are where we have over 1,500 people. So you can see our key presence in all of the key capital cities and urban centres. We've also got a fairly good coverage outside of the major cities, and you'll also see that we have a fairly significant presence in all of the major ports around the country, which is going to be pretty important in the future. So, Gladstone, Port Kembla, Newcastle, Kwinana, Port Hedland, basically, we've got reasonable sized businesses in all of those key industrial centres. I'll also point out, I think Julie mentioned earlier on, the zero harm performance of the business. And you can see just the statistics in the top right hand corner there, just 0.52 for our LTIFR and 1.6 odd for our TRIFR. They really are class leading statistics of which we're pretty proud of. And safety is a ticket to play in a lot of the industries that we actually work in. So it's quite important for us to maintain that sort of outlook. Just over to our lines of business. So our power and energy business covers all refining and petrochem, LNG, coal seam gas, coal and gas-fired power generation, pumped hydro and renewables, including the O&M of 4 utility-scale solar farms. So whilst we currently don't have the capability to build, I wouldn't say we've got the capability to construct pumped hydro, but we're not in that space, we're in the maintenance space. And hydro is a very important part of our business, and in fact we do have the largest hydro maintenance business in Australia. So our work scope consists mostly of long-term maintenance long-term maintenance contracts with Tier 1 customers, performing specialised turbine and boiler engineering, maintenance, capital works and shutdowns. And as Grant said earlier, certainly we have a very key presence in that power generation space. So key customers include Santos, Origin, AGL, all the usuals, but very much a tier one customer base. So as you'd expect, decarbonisation for us, especially in this sector, is both, you can see it as both a threat or an opportunity. In our case, we're very much in the latter. We really do see this as an opportunity piece. And we made that decision some time ago that we need to take the approach of helping our customers on their decarbonisation journey rather than just being passengers along for the ride, if you like. So helping our customers to decarbonise is really the opportunity here. And this is we've got a very, very large asset base that we look after in this space, and we've certainly got the technical capability to help them to do that. So we've been working pretty hard on developing solutions in that space since we held our first Future Energy Forum in 2019. Right, so again, it's not new to us, and I'll come back to that later in the presentation. If I slide across to our industrial and marine business, so similar scope in terms of maintenance, shutdowns, capital projects and programs, but we've got our our traditional iron ore markets, and BHP is quite a big customer of ours, as you'd probably expect. But also we've got quite a lot of exposure to nickel and copper, which are pretty exciting markets to be in right now with the investment that we're expecting, or we are seeing now and expecting to see over the next few years. So an example of that is our key presence as the largest contractor in Kalgoorlie. So Kalgoorlie is in the middle, right in the dead centre of BHP's Nickel West nickel manufacturing assets. So we're in these prime positions, if you like, in several locations around the country, and we also completed an $80 million parcel of work performing a large parcel of the Olympic Dam shutdown at Roxby Downs recently for BHP. So in that I&M business, that industrial and marine business though, we really see the key opportunity here, or key growth opportunity. It's really around the rejuvenation and renewal of Australia's industrial and manufacturing fleet of assets. That whole sector has been run down for many years due to globalisation and a lot more offshoring, as you know, and we're really starting to see some key investment decisions being made by some of our customers at the moment, where we're seeing them start to reinvest in those plants and actually create a vision in the future of what the future of those plants might look like. So really, I might add that when we see those sorts of investment decisions being made, that we're also seeing those investments being made in the light of obviously lowering the carbon footprint for the future. So a key example of that we're dealing with at the moment actually, and it's very early stages, but you would have seen the announcement recently that BlueScope are going to reline number 6 blast furnace at Port Kembla Steelworks, right? And that's going to be a multi-year project, and it's going to also mean the introduction of several new technologies along the way. So they're the sort of decisions that have been put off for years, and some of these companies are now a lot more confident in terms of their ability to make the call because they're starting to see a bit more clarity around what the future looks like. So key customers there, of course, include BHP, as I've already mentioned, BlueScope, Wesfarmers and Orica, to name a few. But we've got a pretty good spread across the industrial base right around the country. So just across now to health and education. So our focus in health and education, apart from COVID, of course, which hasn't helped, has very much been on consolidation and renewals. So over the last several months, we've renewed approximately $680 million in the reviewable services components of our PPPs at the Royal Adelaide and the Bendigo hospitals. And we've also renewed our soft services contract at the Alfred. And we've renewed those on improved terms and conditions to what we had previously in place. With 17 PPPs in our H&E portfolio, we're very well positioned in this space to take advantage of increased government expenditure in line with both increasing community expectations and population growth, as I mentioned earlier. We're also reviewing a number of adjacent growth options in the health space because we really have been focused on that PPP area for the past few years as we've pulled that together. Our government business, though, is quite diverse geographically, and it provides mostly hard FM services across various state and federal agencies, as well as cleaning and security services across trains and trams mostly, rail space and light rail space. This includes a substantial number of government buildings, as well as social housing, as we mentioned earlier, of over 100,000 houses there across New South Wales, WA and South Australia, so it's quite a well-spread business. It's also quite a large market with significant organic growth opportunities. And this business in particular stands to benefit from any post-COVID stimulus. And we're also starting to see flood recovery works come through, especially in the New South Wales areas and the northern New South Wales regions as well. From a carbon footprint perspective, both of these businesses are very much more at the end user side as opposed to power generation we discussed earlier. But they're very much at the end user part of the equation. And I think if you refer back to those numbers we mentioned earlier around the 17 PPPs, all the hospitals, the schools, the 287,000 buildings, the 100,000 homes, if you consider that each one of those is going to have to be modified in some way as the country seeks to reduce our carbon footprint, even if the expenditure is only a couple of $1,000s or less than $10,000, you multiply that out by the number of assets that we look after. And that's a substantial opportunity for us that sits just in that space alone within our existing asset base, where we've got contracts in place that actually allow us to do that type of work. So you can sort of see how this is just such a huge opportunity for us over the next few years. So just a little bit, if you haven't heard enough about decarbonisation already, I thought I'd mention it again. But hopefully you get the message that it's certainly a very important part of where we sit going forward. But just to better explain our general approach to decarbonisation, we've kind of identified sort of three key areas of opportunity that we've been positioning towards to really help our customers through the energy transition and their efforts to reduce the carbon footprint. So if I just draw your attention to just three horizontal boxes, if you like, across the top there. So the first area, transitioning our customers' assets to new technology. So the first area there is really through providing specialist skills, engineering support and technology aggregation to help our customers transition to new technologies. These new technologies might vary from the installation of hydrogen turbines, of which we have OEM agreements in place to help us to do that, and hydrogen fuel cells, through to carbon capture, and also through to improve building energy management control systems. So it's really about helping them to actually change technology or modify kit. The second area is really providing support and helping our customers operate their existing equipment differently to achieve a lower carbon footprint, or because the market in which they now operate demands different operating parameters. So an example there would be the engineering studies that we've already completed on numerous power stations to help our customers run their power stations on lower loads and to ramp up and down more quickly to respond to market pressures with the impact of renewables on the NEM. So it might also include changing the maintenance regime to better suit efficiency rather than plant availability. So some of these coal-fired power stations, they've got all this capacity that they're not using. In the past, they were all maintained around going flat out 100% of the time pretty well. But in the future, they've got, with that excess capacity, they're going to be running those plants over the next few years on the basis of perhaps only requiring one or two of the 4 units they have available. So therefore, they don't need to maintain their equipment the same way they did previously because they're not trying to achieve that higher availability, and they've got more redundancy in their system. So it changes the whole way they maintain their kit. And we're certainly in the space and have been helping them to do that. The third, especially with our directly impacted customers, like some of our power station, coal-fired power station customers, again, for example. The third there is really helping our customers through their own structural changes. So this is a really big opportunity for us. So you've got large workforces with some of these power generators in predominantly fairly highly unionised regions and industry that basically don't really have a job anymore, to be honest. Right? So renewables are fantastic, but a solar farm needs 4 to 6 people to run. A coal-fired power station might have 400 people on it, right? So we're helping some of our customers very specifically, and we've been doing this now for well over probably 18 months. We're helping them to find pathways to redeploy their people. All right? So there's that redeployment piece where we can use these people elsewhere in our business because we need people in other parts of our business that are growing, right? So there's that redeployment piece, but it also presents opportunities around outsourcing where some of these power station customers are trying to variabilise their cost base more. So we're starting to see that pick up in the marketplace. The other point I just wanted to make or one of the other points I want to make on this slide was if you go down to the bottom half, it's really about the stuff that we're already doing. So right now we have about $250 million worth of projects just in facilities and asset services that are decarbonisation related, and they're from very specifically around some new technologies like carbon capture. I think Julie mentioned before that, Julie or Ricky mentioned before that. We're probably one of the few contractors that have actually done, or we are one of the few contractors that have actually built carbon capture plants in Australia. So it's something we've had some heavy involvement in. We've got some very unique perspectives on technology in that space through some of our technology and agreements and partners that we have in play. So if you do have a look on that list, especially down the left-hand side there, like I said, we're seeing some very specific technology plays, but we're also seeing decarbonisation manifest itself in terms of helping our customers to electrify their assets, for example. So we are seeing electrification come through, and that's not high tech, that's not big technology stuff. This is building poles and wires for some of our customers where they had gas-fired engines in the coal seam gas fields, for example. Right? They're now converting to electric engines to run their wells. So there's opportunities associated with changing kit that's already in play with kit that has a lower carbon footprint. So we're seeing that manifest itself across the business too. Just a bit of a case study just quickly on Eraring. So, Eraring Power Station's been previously announced as closing in 2025. We have what's called a consolidated maintenance contract there, which covers maintenance, etc., right across the plant and some operating activities as well. But that contract goes to 2026, and you've got to think of these power stations in the context of Eraring Power Station, and most coal-fired power stations were built in a specific location for a reason. It's their location on the grid that counts, right? And you think of all the infrastructure in terms of power transmission that sits around them. Companies like Origin, they won't walk away from Eraring, right? Even if Eraring does close in 2025, they've already made announcements around a fairly, I think it's a 700 odd megawatt BESS, a battery energy storage system on site. We may also see other energy generation solutions on that site, and we're certainly in a really good position to help them, both in the transition period, as I've already discussed, but also in terms of building and constructing and installing, if you like, new technology on site. I will point out that we don't see ourselves as constructors. This is a services business, right? But we do install technology, right? So we do install technology for our tier one customers under very specific terms and conditions and a very specific risk profile. Just quickly, solar farms. So we do operate a number of solar farms. So you can see there, 340 megawatts, and this is why I know how much what it takes to operate and maintain a solar farm, because we do that. So 340 megawatts, we've got about 1.18 million panels. So it's quite a nice capability to have, if you like, given what we're seeing across the market, and given that when you talk about things like hydrogen and some other alternative fuels, that they actually have to be generated by renewables. So it's another part of the puzzle, if you like, in terms of capability. Just on hydrogen, and again, there's always a lot of debate on hydrogen, of course, but I did want to touch on it, and I'm sure you've seen this slide in a number of forms, but it really just showcases the currently proposed hydrogen projects around the country. There's about $200 billion in total, and I'm not sure if you did this slide today and then next week you'd get different numbers, but either way there's a lot of zeros involved. So I know there are a lot of doubters out there about what the hydrogen market looks like, but I think that you have to come from the perspective that along with renewables, batteries, pumped hydro and synthetic fuels, to name a few, hydrogen will have an important place, especially when it comes to the replacement of reliable seasonal power generation and heavy freight. So I'm pretty certain we'll also see an export market of some scale. There's a lot of money being invested in that space, not only in Australia but offshore as well. Still on hydrogen, so over the last 3 years we've been developing strategies and solutions and how we position ourselves as not only as a ready-to-go choice for our customers, but also as thought leaders. We've really tried to get ahead of the game in terms of what the technology looks like and how to aggregate that technology. So to this end, we formed a number of technology and market relationships and partnerships. And this slide, I guess, showcases a few of those. And so we have been executive members of the Australian Hydrogen Council since just after its inception. And as far as I know, we are still the only contractor that sits on the Hydrogen Council, by the way. And we've taken very active roles in various policy setting committees. We've also built relationships ranging from exclusive partnerships, like we do with Mitsubishi, through to signed NDAs with a number of technology partners across the hydrogen value chain. We have an engineering-led future energy solutions group that sits within our power and energy business that, in conjunction with our technology partners, gives us a deep understanding of how to pull these different technologies together. So a lot of these technologies are off the shelf. You've just got to aggregate them in the right way. So, and I guess it also allows us really to pivot quickly and respond to our customers and respond to the market, which is changing every day. And whether that's hydrogen production, storage, generation, fueling, or related infrastructure, storage infrastructure, for example. So we're very responsive to the market in this space. In fact, as I said, I would suggest we're probably a bit ahead of many of our customers. So it's an area we've put a fair bit of effort in. I guess the takeaway really is that if we were to receive a hydrogen inquiry from the market tomorrow, we'd be pretty well placed to respond to that. Just a bit of a shift of focus, if you like. So just on to Royal Adelaide Hospital. So our contract at Royal Adelaide Hospitals, it's a great example of the variety of complex services that we provide in our health and education business. So as per the slide, every day at RA we prepare and deliver 3,600 meals, we complete 110 operating theatre setups, transport around 200 patients and take around 1,000 calls to our help desk, whilst at the same time providing 24/7 security services, operating and maintaining a fleet of 25 AGVs, auto-guided vehicles, and maintaining over 130,000 assets. So it's actually a very complex and unique capability that we have. And we're held to a very high standard by the state as well, which is important. So again, it's just a fantastic example of the complexity that we're able to deal with and within our business. And certainly, as these sort of opportunities come up in the future, we've got a real showcase in the Royal Adelaide Hospital, and Bendigo Hospital, at Orange, etc., in those PPPs that we currently have in play. I haven't really mentioned much about our asset and development services business, but they basically provide a number of specialist services across our sectors. So these include installation and maintenance of HVAC and building management systems. And given that HVAC is usually the largest consumer of electricity in any building, then they again have an important role to play in rolling out low energy solutions across our customer base. So you can see that on the slide there that some of the areas we've already done that in over the past year or so have been the Melbourne Airport and also Baxter Health, to name a few. The next slide, still a part of our asset and development services business, is basically just demonstrates how we're pulling together the post-pandemic clean air theme with energy efficiency. Given the competing demands for better ventilation and air conditioning tempered by lowering our carbon footprint. I mean, they're almost at odds with each other, right? Wanting more better aircon and better ventilation, but also wanting less electricity use. So basically, we spent a lot of time and effort pulling together technical solutions that allow us to do that. And as I said before, when you apply these sorts of solutions across the broad asset base that we have, you start to rack up the scale of the opportunity. Just finishing off on some digital technology highlights aimed at reducing costs of both our customers and ourselves. So firstly, we have successfully piloted our blockchain trial with BHP at Port Hedland. The contract that we have there maintaining the port facilities, it's large, it's very logistically complex because of the amount of employees we're having to fly in and out and accommodate and feed and so on and assign work to. So it's very complex and it incurs significant administrative effort. So it's early days, but so far we're seeing some very promising results in reducing that administrative effort, as well as a number of other opportunities that we're seeing with blockchain. So BHP aren't on our blockchain yet, so we've just set it up within our own team, and it's already showing some real advantages for us. And we believe that's the first in industry, in our industry at least. And it'll really make a difference to us as some of these contracts grow over the next few years. Among the various other digital initiatives, including some of the trials we've been doing and implementations of augmented reality, we've also recently implemented a digital twin in our Melbourne Connect PPP. So this is a tertiary education precinct in Melbourne. The clear early signs are that we will see real savings generated in the way we maintain the assets and the assets that we have responsibility for, in terms of being able to improve the life cycle or extend the life cycle of those assets, reduce repair time and costs should anything actually break down as well. So, so it's got real ramifications for the rest of our PPP portfolio in, given our ability to roll this out amongst those other 17 odd PPPs where we have life cycle cost responsibility. So it's a real promising technology for us. So that's basically my last slide. I guess just in closing, the message I really wanted to leave you with is that our 4 key lines of business all sit in growth areas aligned with our urban services strategy. We have considerable work in hand. We've got a strong pipeline of work that's growing. We do have a very low risk profile as a business, and we've done a lot of work to reduce that over the past few years. And we're very well positioned and in fact delivering on helping our customers on their decarbonisation journeys. So huge opportunity for us, and we're really looking forward to obviously a bit of clear air post-COVID. Thank you.